Guys, how we doing? It's Sunday afternoon, getting ready for the trading week. Yes, yeah, my daughter's in the room here. I'm trying to trade, look at some charts. And so yeah, this is what we're doing. We're prepping for our week right now. I'm looking at the charts, where we're gonna see a bounce, what are we gonna see, trying to anticipate the moves before the market starts moving. It's very important. Everybody has a plan until they get punched in the mouth, right, guys? So it's important that we just stay very patient, and hit your targets, control your risk, make sure your risk is always minimized, but also shrinking as the trade goes in your favor, right? I'd rather be a scalper and just get knocked out with a small profit over and over and over again all day rather than holding something and be open to risk, to getting knocked out of a trade. I don't really have the patience myself for this swing trading type stuff. I really like just capturing intraday moves, small risk. When it goes in my favor, adding to the position quickly, but then also learning to scale out of a trade very quickly and where to move your stop and when to not move your stop. Okay. Um, and all this is very dynamic. This is what makes trading so difficult, guys. Uh, is that the rules are not static, they are dynamic. What you're doing in one market, you're behaving totally different than how you're trading in another market. The market contracts and the market expands. It moves from region to region on the chart, right? Well, when it's expanding, meaning it's going up or down to the top or the bottom of the chart, right? Um, you'll get some vertical moves, right? Where you don't necessarily need to give your stop a lot of room, right? Like look at this down channel right here, this powerful down move, right? Previous support becomes resistance. Previous support becomes resistance, right? This is the mantra that I live by. And, you're looking for a place to get in where other people are going to get in. So go for the obvious play. Go for the obvious play. So, like right here, this thing comes down. Let's say I open my charts and I just see this procession happening right here. Oh, it had new lows back here, kind of curled downward, hit the support again, and there was no support. It just busted right through. Well, a lot of rookies are going to come in and they're going to come and buy, or they're going to come and sell this, right? They're going to come and sell low. Well, what does it do? It bounces off of another target and retraces. Well, the reason it had to come back up here is because they wanted to sell some more up here. They don't want to sell down here as much, right? They want to start scaling in up here. Why? Because previous support becomes resistance. Previous support becomes resistance. Previous resistance becomes support. So here we have support. I don't know what happened to the left in the past there, but something happened to where, oh, that's where all these shorts covered, right? You got covering and new buying happening here, but they had to make it come back up to this level so they could sell some more. Because why? Because it's going lower. It's not going higher, right? You're seeing the evidence here of these lower highs. I love to see these. You know why, guys? Because this is a very defined risk. See how it kind of drifts with no exuberance up to this peak here? Let me zoom in some more so we can really focus on what I'm talking about here, right? So look at this. When I see this, I'm seeing a downtrend, right? It's obvious downtrend. I'm not looking for longs. If I do a long, it'll be off of somewhere where there's like something that happened in the past where it's obvious that these shorts should be covering. for a minute, right? So the shorts are covering and new buyers are coming in. So you have that, you have this retracement. But what I like to see on this downtrend is these spikes right here. This is beautiful. When I see this, I see like a diamond shape, right? That's a topping formation. Let me make this diamond here real quick, like that. And you come in, this is what I see, right? A diamond shape. So this is like toppy to me, but so you already know it's going to go down, right? Because it found some resistance here, made a new low, and that was off a continuation move here. So if you look at this move here from here to here, it's probably the same as this to this. So the market is literally telegraphing to you, hey, how far is this going to go when it goes down? Well, it goes down this leg, comes into a formation. Obviously, they're selling a lot more in here, right? It's just not exuberant selling. So what you have is this no buyers, lack of buyers, and then boop, another measured move down from here to here, and then here to here is equal. It's the same size move. I could measure this, take the time and measure this from this to high to this low, and then come here and take this high to this low. It's going to be the same exact size, right? So the market telegraphs to you what it wants to do and what it's going to do, right? Okay, so we had some selling here, obviously had some selling here. It broke out to the downside. But what do rookies do when they see exuberance, right? They jump in and they sell down here, guys, right? Don't do that. What I look for when I'm seeing this down leg right here, I think that one of the best places to sell on this chart is right here and right here. You guys see what I'm looking at here? What you want to get to is seeing the risk and the reward on the chart. Okay. So what you have is a preponderance of evidence in this range, right? Where there's always something going on here, and then it comes back to that area and it just stagnates. It doesn't keep ripping upward, right? So if in a bull market this would come down, the buyers would come in, and then the buyers would come in again down here, you know, and then it would rip higher, right? And then use these targets to take out these on the way up. But it's breaking down. Every time it goes up, it goes down further, right? Well, when I see this formation here and this strong rejection candle here, um, it rejected new highs, then it couldn't close above this area at all. And then when it finally did get kind of close to it, boom, big red cloud cover candle here to the downside. And then you kind of can see, okay, this next move reiterates it, right? I'm on a 1 minute chart, so this is happening pretty fast, right? Too fast for a rookie. You need to be able to kind of see, oh, what really happened here. This is the real story, sentence by sentence, word by word, what happened in this story, right? But I see this as like a prime selling opportunity right here. And then this is where you would add, right? If you're a really exuberant seller, because the risk is defined on the chart, right? You know that this is a target already because it was a previous swing low. Well, right here you have what 45.78 to 45.81. So you got 3 points worth of risk here to make all this downside here. And this is where you take a good pop shot with some leverage, guys. This is the part like a lot of people teach you to get in on this breakout and then wait for it to retest and then get in. But then that pushes you later and later in the game, right? What I like to do is find these points right here. And if there were EMAs or something on this chart, which I don't use, you would probably see it comes through here and just kind of peaks out right there. So it's obvious to all the EMA traders, oh, it's time to go short here. But what I love is here's the target. So you know it's going here at least, right? To go test this low. You get consolidation, diamond topping pattern, and then Sellers come in and say, "Hey, here he hits new lows and blows out all these lows right here, right?" Well, it's telling you, "Hey, we're moving down." Well, if you want to move down, don't you want to sell up? You want to sell higher, right? So the breakout of this new low isn't the time to sell. But when the risk shrinks to where your risk is very defined right here, right? I mean, you might as well put a huge line right here and make it, really thick, 4 point, hey, red. Let's paint it red so we know, hey, dude, like, uh, don't be buying here into this area, right? But what I see this is like, okay, the market shows it's going down because it comes out of this popping pattern, but then it retraces, and this is where the rookies get their face melted off, right? They're thinking, oh, power to the downside, I'm going to go ahead and sell. No, you're either too late where you should have topped out here and sold it here, or you got to wait to put your sell order here. Well, what do rookies do? Especially scalpers too. They'll be like, sell to get this downside movement. Oh, stop out up here, so you get this move. You basically get this candle body of profit, which isn't much, but it'll pay your grocery bill. But a lot of rookies will be selling down in here. Oh, it just broke out. No, it kind of didn't. It needs to retrace so we can really sell up here, guys. These are where the sell orders are at. You can see here it kind of breaks out here. It's going to retrace. So when it breaks out here, don't move, don't do any orders yet. What you want to do is say, okay, my buddy got this price as a sell a few minutes ago. I should expect the same price, right? And so what you do is when this is piping down, you're like, okay, cool. I need it to retest. So I'm going to put my sell orders in here. And then, you want to sell here with your risk up here somewhere above this red line. So your stop loss is this big, and then you're looking for that, on the chart here. So this is a target. This is the target when all this crap is going on. It is lunchtime too. I don't know. That has an effect on it too a lot. These people are going to lunch in New York. They're going to these hour and a half, 2 hour lunches and having drinks and stuff. There's nothing happening in this market, but it tops out. But I see this as the ultimate place to sell right here and right here. But a lot of rookies are told, hey, when it breaks out of this new low, that's where you sell, right? Well, what happens? You're already too late, so you miss this move to here, which is a lot of profit, right? Which is low risk profit up here. But when you enter your trade here, you got to put your stop loss up there anyway, right? So if you got a $500 of risk between this yellow line and your red line up here, man, I would love that to shrink to 125 risk and then get capture that move and then see if it gets retested here on this low. And obviously it didn't. So you're in profit now while you would look for the other reason why or where it would cover, right? And so what did it do? It busted out. A lot of rookies would sell this as the breakout from that low, and then they would hold it because they don't see this target for some reason. I've done it before, right? A million times. Well, what does it do? It rips back up and rips your face off. When you have the trend correct, you were already bearish. You know it's going down. You caught the move here, but you held on too long because this is a target, but also it needs to go back to the place where it was a rip to begin with. So all these sell orders are here under this previous low. Well, they get filled, but this is a scalp, guys, right? This is a scalp. This is a 1 minute scalp that you just get out of. You kind of want a trailing stop or something to get in here, but you got to understand what the rookies are. They are fodder. They're cannon fodder. They get their face melted off because they trade into a target and they're not expecting a retrace as fast as it is. And then they don't have, by then they've lost an open profit and they've probably got stopped out up here on the way up. the last thing they're going to want to do is take another sell, right? So they get kicked out, we take their money, and then we just go ahead and sell a lot more at that breakout point again. So when you miss this move, be happy because you have 6 minutes, 5.5 minutes to get your sell order in right here where the previous support becomes resistance.